Hey guys, and welcome to my screen. Finally, we get to see all the good things I've been talking about on the whiteboard, how you can use different time frames to basically improve your trading overall. Now, what I have in front of me is actually a gold chart at the moment. I'm going to be using gold and GBP USD. These seem to be my favorite at the moment. I'm going to be using them to basically explain to you guys in detail as to how you can understand how to use multiple time frames to basically improve your trading, and so that at least you understand how to do a more top-down analysis of the market. I notice a lot of people struggle with this, understanding what each time frame stands for and how you can use it to basically improve your trading. So I'm going to start on the time frame I have in front of me is actually the daily time frame. Now, basically, what are time frames in the market? Time frames in the market just basically mean that each candle represents that time frame. So basically, each candle that is printed on a daily time frame represents a whole day of trading. So this candle you can see in front of you right about here. Let me just zoom in. Each candle here, so this represents so at the time of shooting this video is a weekend. This candle represents Friday, this one represents Thursday, Wednesday. So each of these candles represent 24 hours of trading. Okay, as you can see here, this is a bullish candle, so the candle probably opened at 1471, reach its lowest point of 1461, reach a highest point of 1486, and finally closed at 1479.59. So this is a bullish candle. This represents what happened the entire day. Now, because this candle is representing a whole day of trading, so what you're basically trying to explain to me is what I'm trying to explain to myself is that if I went to a 1 hour time frame, 24 of those candles on a 1 hour time frame will represent just this one candle. I'll take that again. Because each candle represents 24 hours of trading, right, and is represented on one candle, that means if I went to a 1 hour time frame like here, basically I would need to basically one daily candle, right, equals to 24 of these 1 hour candles. Okay, now same thing with the 4 hour time frame. So there are 24 hours in a day, so that means I would need 1 2 3 4 5 6 candles of a 4 hour to represent one day. And if I came on a weekly time frame, okay, each candle represents 1 week. This represents a whole week. This basically represents the whole of last week's trading. But guys, you have to understand that 1 week equals to 5 trading days. So I will need 5 daily candles, okay, to represent just one. So basically 5 daily candles would have formed, but only 1 weekly candle would have just basically going up and down, up and down, up and down. Same thing for the monthly time frame. 1 monthly candle represents 4 weekly candles. So I hope you guys can see how the progression goes. 24 1 hour candles equals to 1 day. 6 4 hour candles equals to 1 day, which obviously 24 hours. 5 daily candles equals to 1 weekly candle, and 4 weekly candles equals to 1 monthly candle. I'm pretty certain that most of you that are watching this already pretty know. You guys are already very familiar as to how these different candles are represented on different time frames, but I just thought I'd express that again. Now, the major reason that I'm here is to basically teach you guys, you know, how to basically use these multiple time frames to predict what the market is going to do next. So the first thing I have in front of me here is the monthly time frame. Now, you guys know that I'm a very technical trader. I believe strictly in price action, although I might use a little bit of indicators here and there, but I'm predominantly a price action trader. So this is exactly my thought process whenever it is I want to come and use multiple time frames. Okay, I'm always so tempted to say multiple different, but they mean the same thing, multiple different time frames. So multiple time frames. Okay, so on the monthly time frame, you might want to grab a paper and a pen so that you can understand how I do this. Okay, on a monthly time frame, I only come out and look out for certain things, right? On a monthly time frame, I would simply come and look out for candlestick patterns. I look out for candlestick patterns on a monthly time frame. Now, a lot of people use candlestick patterns on 1 hour, 4 hour. Well, they might work occasionally, but where you should actually be using candlestick patterns are actually on a monthly time frame, and I'll explain to you why. Because just imagine this, right? Imagine if you saw a reversal. So for instance, I think this is a 3-soldier pattern. You saw a reversal, right? Red, indecision, bullish, right? So this is probably an evening star, right? Morning star rather. And you see this kind of candlestick pattern form. You know that according to the laws of candlestick patterns, after a morning star forms, we tend to see 2, 3, 4 candles after that being bullish, right? So imagine I come on a monthly time frame and then I see a morning star form. What that simply says to me, let's say the morning star formed between April, May, and June. What that basically says to me is that July, August, and September are going to be bullish months. Just by looking at candlestick patterns on a monthly time frame, I can pretty much predict what's going to happen for months to come, for the next 3 to 4 months to come. So that's exactly why I like to come on. Monthly time frames to basically look at candlestick patterns. Because why am I looking at candlestick patterns on a 1 hour or 30-minute time frame where a news event can just come and just mess up everything? But a monthly time frame is very concrete. If you see an evening star form on a monthly time frame, or a morning star form on a monthly time frame, or any form of candlestick pattern reversal form on a monthly time frame, be rest assured that it is most likely going to play out. And the best part about it is you know what's going to happen. So if it's a reversal candlestick to the upside, you know that the next couple of months are going to be bullish, and if it's a reversal candlestick pattern to the downside, you know that the next couple of months are going to be bearish. Okay, now on the gold chart at the moment, I can see 1, 2, 3 very strong bullish engulfing candles. The previous month before now was actually bearish, but from what I can see is we still have very bullish action happening. This is just basically a consolidation, because after this kind of very bullish candles, it's always very natural for you to see a consolidation. This candlestick does not represent a reversal or anything. It just looks to me like a rest. We have another green candle forming at the moment, so we're going to have to see how this one closes before we know if we're going to continue heading higher or heading lower as per candlestick pattern. So I always like to come on here and basically look at candles. So monthly time frames are for candlestick patterns. I'll take that again. Monthly time frames are for candlestick patterns. So first of all, I'll start off on my monthly time frame to understand what the hell is the candlestick patterns, what the hell are they doing, okay? Now the next time frame I'll come onto is the weekly time frame. Now what I do on a weekly time frame, basically I come on the weekly time frame. Sorry, this looks quite the candles probably look really small. I'm gonna have to zoom this in. What I'm gonna come and do on a weekly time frame and sometimes / a monthly time frame is to see if there's any what they call chart patterns, right? Chart patterns being double tops, double bottoms, head and shoulders, and inverse head and shoulders. But I actually did spot an inverse head and shoulder actually on a monthly time frame. Okay, sometimes when you scroll, okay, there's a little tip and trick that I want to share with you guys today. So if you're having difficulties understanding what's happening on a particular time frame, all you need to do is move up a time frame. If you're having difficulties understanding what's happening on a 1 hour, go to a 4 hour. If 4 hour is showing you too many candles, go to a daily. Daily is not really giving what you want, come to the weekly. Okay, so as you can see on a monthly time frame, I can see a very, very clear inverse head and shoulder forming. For those of you who don't know what inverse head and shoulders are, you might want to check my other video on chart patterns that I might be dropping after this one. If you stay to the end of this video, you can see a link to watch that. Now this is an inverse head and shoulder. Basically this is a reversal pattern. This market was coming down, but after we formed this reversal pattern, the market is now looking to the upside. So monthly time frames, candlestick patterns. Weekly time frames are for chart patterns. Chart patterns, I want to see if we have any double bottoms, any double tops, just basically to understand the gist, right? I just want to understand what exactly is happening. Okay, and also before I know everybody's waiting for me to go to a daily time frame, but before I get to that, I need to basically explain to you guys how you can just use even the highest time frames to basically, you want to use the information on the highest time frames to basically trade on a lower time frame. You want to get the direction from a higher time frame so that you can take it to a lower time frame to go ahead and trade. Now on a higher time frame, being a monthly time frame, I can see that gold has been putting in higher highs and higher lows, higher highs and higher lows. I can see there's been a decent uptrend. This is simply a pullback, and this market is pointing all the way to the upside. Luckily for me, I also have a place to draw my Fibonacci from swing high to swing low. Okay, Fibonacci from here to here. This market has come into the 50 and 61.8 Fibonacci region. We have rejected from it. We are now pointing to the upside. We also have an inverse head and shoulder pattern that has formed even inside of this 50 Fibonacci region, giving me more push, giving me more confidence that yes, this market wants to continue pushing to the upside, and we're definitely going to come and we're definitely going to go higher. And just by looking at this market, I can already tell that the next level target for this market is actually going to be here. Okay, the next level target for this market is actually going to be $1,800 per ounce, just by looking at it, right? Because the law of the trend basically states that for every time we make a higher high, we make a higher low. Make a higher high, we've made a higher low, so definitely we're going to come and make a higher high. Even if we don't make a higher high, we must at least come and make equal highs before we start to reverse. So just by looking at the monthly time frame, I already know where the market is going to go next. Okay, the market is going to go to $1,800 per ounce next, just by looking at the monthly time frame. And now guys, I can now easily come down to my daily time frame. I can delete all of this. Now I can zoom out. I can easily zoom out on the daily time frame, and now I can easily come and zoom into the most immediate trend. I can easily come and zoom into the most immediate trend, to basically try and trade the daily time frame. Now I can see an immediate uptrend that's happening, and because the monthly and the weekly time frames are both telling me that this market is extremely bullish, when I come on lower time frames, I will only be looking for buy opportunity, even if I came on a 4-hour or a 1-hour time frame. Okay, so on a daily time frame, I can see some form of a flag pattern that has formed at the moment, some form of a triangle that is forming at the moment. Okay, now guys, once we're able to break out of this triangle, mind you, the triangle can break in either direction. We can either break lower or we can break higher. Now, because both time frames, the monthly and the weekly, making higher highs, inverse head and shoulder, bullish engulfing candles, the only thing I'm going to be thinking about is buy scenarios. And guys, the only buy scenario I see in front of me is whoosh all the way to the upside. So now that I have my entire bias for this market, I can even come on a 4-hour. Okay, I hate coming on lower time frames. Okay, I can even come on a 4-hour. Now I know exactly what to look out for. Now I know exactly what to be trading, and I can trade it on lower time frames. So what people fail to realize about lower time frames is that you're more subject to market manipulations, you're more subject to broker misquotes, you're more subject to fundamental news, all of the stuff that are bound to take your stop loss out. But if you already understand the direction of the market, where the market is going to go next, when you come on lower time frames, you're not, because it's crazy, some people might be looking for sell opportunities. Okay, smaller time frames, or most often than not, mislead you into trading in the wrong direction. I'll take that again. If I delete this, right, I can delete this, and it's very possible that on a lower time frame, the only thing that you're possibly seeing is a downtrend at the moment. You're probably possibly only seeing this. Let me just zoom in properly more. You're probably only just seeing this, right? And you're probably thinking of sell. Where can I get in a sell? This looks like a downtrend, lower lows, lower highs, lower lows, lower high. But I know a lot of people that are probably trying to sell this market. Don't get me wrong, you might be right at the end of the day, but if you continue trading like this against the trend, you're going to be wrong more than you're going to be right. That's just a fact. So the thing I don't really like about smaller time frames is two things, right? It gives you the wrong direction, number one. Number two, you're more subject to market manipulation, because on 1-hour time frames is where you tend to see a lot of spikes, a lot of fake outs and stuff like that. Okay, now the question is, how should you be using lower time frames? This is how I use lower time frames, right? I use lower time frames in confluence with the overall trend. So now I know that this market is bullish. I know that this market is overall bullish. What I'm going to do is something very smart and very sneaky, like this. Right, I can see this triangle forming, and all I'm simply going to do is I'm going to come and wait for a very nice 1 hour setup. A very nice 1 hour setup. Once we probably break out of this counter trend line, I might just buy somewhere here, buy here. Obviously, because it's a 1 hour trade, my stop losses are going to come below my 1 hour the lowest point of the 1 hour chart, which the lowest swing, which happens to be here. As you can see, I put my stop loss here. I'm going to be trading like I'm trading the 1 hour. Now, ideally for a 1 hour, my profit target should be here. Let me just delete this. Ideally, my profit target for the 1 hour trade should be here. So this is, I'm probably looking at the risk to reward ratio of 1:1 for this trade, if I was trading on a 1 hour time frame. But guys, you have to understand that I'm trading on a very massive time frame, whereby I've seen the overall picture of this market. The overall picture of this entire trend is actually at $1,800 per ounce. Are you guys understand where I'm coming from? From my monthly time frame, I can see that the overall target for gold, probably for the next 4, 5, 6 months to come, the market is eventually going to get to $1,800 per ounce. Now, because I've looked at that on the monthly time frame, and I have an overall price target for gold for the next months to come, I can simply come and have a crazy risk to reward of something like this. This is 13:1. Okay, guys, so you see how 1 hour time frames are all right. I'm not totally condemning it, but a lot of people just use the wrong way, right? Can you see how crazy this? Obviously, it's going to take months for us to get here, but you can see how little I'm risking to make excuse me, sorry guys, I'm talking too fast. You can see how little I'm risking. This is literally my risk. I'm risking this little to make all of this. Okay, I'm risking this little to make all of this. So if I was risking, let's say 3% of my capital, right? 3% of my capital, I would have probably returned, probably about maybe 30% on this trade, or 40%, or probably even half of my account on one single trade. I'm only risking 3% to make 40%. This is exactly how you need to be looking at the market, right? I'm risking so little to make so much. Okay, if you're lucky enough and this 1 hour trade does hold, okay, this market, because of the pardon me, because of the overall target that gold has given us, which is at $1,800 per ounce, which is all the way up here. Okay, let me just drag this up to the right hand side a little bit. I can confidently place a buy trade here and plan to make all these pips. It's not going to happen overnight. Obviously, it's going to happen for months to come. Okay, but the essence is this. I want to place trades whereby, and this is exactly how I trade, I want to place trades whereby I place one trade and I can do whatever the hell I want to do. Imagine placing one trade and it takes 3-4 months to hit your target. Now guys, I'm probably going to make at least 2,000 pips, right? You can't expect 2,000 pips to happen in 1 month or 6 weeks. It takes time. Why am I saying 2,000 pips? Is a lot more than 2,000 pips. People are probably looking at about 3,000 pips, 3,500 pips on this trade from here to here. So you have to give it time for that to happen. But guys, you have to understand that once you click this trade, you can go and do whatever it is you want to do. The market will just keep on making higher highs and higher lows and just basically working for you. This is exactly what I'm trying to explain. Analyze on a higher time frame, come and execute on a lower time frame to maximize your profit potential. Analyze on a higher, execute on a lower, just to maximize your profit potential. All right guys, I was gonna give you more examples. Should I give you guys more examples? Okay, let's move over to GBP USD at the moment, so that we could basically have a general perspective of what exactly is happening. Okay, let's go over to GBP USD. I'm just gonna quickly delete everything on my chart. Now, guys, don't forget we have to come on a monthly time frame. GBP USD. Now, I remember when GBP USD was pulling back all the way here. Okay, all I simply did, guys, I just carried my Fibonacci, drew it from swing high to swing low. The market came into 50 Fibonacci region. I said to myself, once we come out of this 50 Fibonacci region on a monthly time frame and I start to see some bearish candles, all I simply needed to do was just draw a line here. The moment I see a bearish engulfing candle, simply meaning that we have respected this region, we have put in a lower high from this one, we've respected Fibonacci, we have bearish engulfing candles happening, I knew that once we came out of here, our next level target was going to be here. Why is my next level target going to be here? Because this is the guys, you have to understand that this is a trend. Okay, we make lower lows, we make lower highs, we're going to come and make lower lows. Okay, even if we don't make lower lows, we must come and make equal lows as we have just done so far. So guys, because of just this very basic analysis on a higher time frame, I was able to identify that GBP USD over the next month to come. Now, this analysis, I did this analysis as far back as May of 2018. Okay, at the time of shooting this video, this is October 13th, 2019. I did this analysis way back as May 2018, and this analysis had pretty much worked for me for over a year. I've been short GBP USD for over a year, and all I've been doing simply was coming on lower time frames. I'll show you exactly how I was going about this. I'll show you exactly what I was doing. Now, guys, this is that line that I drew on a monthly time frame. Let me just expand my screen here. This is that line I drew on the monthly time frame, and I said once we broke below this line, I was going to be looking for. Remember, guys, the market was bearish, lower lows, lower highs. We came into Fibonacci, we broke out of it. We had monthly bearish engulfing candles, rejecting that bearish Fibonacci, and all I simply did was waited for the market to come down, pull back. All I needed was for this market to pull back once. I needed this market to just pull back once. It pulled back the first time, and I placed my sell trade. And guys, this sell trade has been active all the way down to the overall target at, sorry, I keep switching time frames. We're dealing with multiple time frames here, okay? Guys, I went short here, and I held my hands until the market came all the way down here. I went to do other stuff. All I was simply doing is once the market fell down and retraced, I went short again, fell down, retraced, I went short again, fell down, retraced, I went short again, because I knew the entire perspective of the market. I knew that this market wanted to come all the way from here. I knew that once we came out of this region, okay, bearish engulfing candles, the next level target was here, overall target. A lot of people fail to see the bigger picture. You need to look at this market from the bird's eye perspective, bird's eye view. All right, guys, so analyze higher and trade on a lower time frame, okay? And all I was just doing was waiting for pullbacks. I was just shorting, selling. So I had over 7 to 8 different trades on this pair all the way to the downside, and I literally doubled my account in a year. Literally just trading maybe once a month or twice a month. Doubled my account easily. Wasn't stressing because I was trading in the direction of the trend. Yes, there'll be flipbacks, there'll be pullbacks, but anytime you come and look at it, just come and identify, is the market still making lower lows and making lower highs? Yes. Some of the pullbacks might be bigger than the previous pullbacks. Do not be afraid. The trend is your friend. All right, guys, before I like to go, I just want to quickly recap. Monthly time frames are for candlestick patterns. If you're able to identify a trend on the monthly time frame, all well and good. If you're able to use a Fibonacci on your monthly time frame, all well and good. Just anything that's going to give you more information, go ahead and put it on your graph. Once you're done with that, identify the key levels on the monthly and delete your tool so that it doesn't distract you. Come on a weekly time frame to basically identify if you have any chart patterns that might be working in your favor. Now, for GBP USD, what was working in my favor was this guy. I had a double top. This double top formed inside of a bearish Fibonacci. Of course, I was going to take advantage of it. Everything was just telling me, dude, it's time to go short. Sell, sell, sell. Even the immediate weekly trend was broken. Everything was just looking like it's going to fall down. Why not? All I simply did was waited for the market, the market to activate itself, waited for a pullback, and I went short. And I was just shorting this market all the way down, shorting this market all the way down, all the way down until we got here. And now I'm totally out of GBP USD. In fact, because this is now looking like a double bottom to me, I actually have a bullish trade. So you can see how I profited all the way down, and now I want to catch some pips all the way to the upside. Okay, guys, so weekly time frames are for candlestick, not candlestick patterns, are for chart patterns. Double tops, double bottoms, inverse head and shoulders, and head and shoulders. Anything that can give you more clues for the market to flow in your direction, please feel free to identify it. And then on the daily time frame is where I now come and start looking for trade opportunities, plotting my support and resistance. If you want to learn how to plot support and resistance, stay till the end. I'm gonna show you a video that you should watch. Okay, if you want to know how to understand what chart patterns look like on a weekly time frame, stay till the end of this video. Stay till the end of this video. I'll be referring you to that as well. And yeah, so that's what happens on the daily time frame. My days, I lost my line of thought. So daily time frames are for support and resistance, and then you can come on your 4 hour and 1 hour to look for that very nice entry. That entry, literally, some of you guys have some really nice entries on a 1 hour, but the problem is that you just don't hold on to it for long enough because you just don't have the general perspective of the market. I know some of you guys would have been wishing, why did you close out some trades on a 1 hour time frame? You could have just left it open and you could have made a lot more. So come and do your analysis on a higher time frame and execute on a lower time frame. Alright guys, so stick around while I take you over back to my whiteboard so that I can obviously refer you guys to the videos that I want you guys to watch. That's basically going to help you guys, you know, be able to identify some of these things I identify so easily. Alright guys, love you guys and see you guys on the whiteboard. Peace and bye. Bye.